Traders, welcome back to our price action trading lesson. To navigate price action accurately, we need to follow the price action rules diligently. One of the rules is a trend line rule, which says after there's a close outside of the channel, we expect for prices to test the extreme. And since I'm identifying the context, I also need to identify the key levels for the trend range, because every trend range is bounded by two important key levels, and these key levels may eventually come into play. So as I'm observing price action working lower, with the close outside of the channel move to an extreme, I'm expecting correction or reversal, because this downtrend played out, and this is not a strong downtrend by any means. This is just a trend range. We broke lower. Most breakouts may fail. According to rules, 8 or 9 times out of 10, you're going to have at least some form of a breakout pullback. So what I have to do, since I can see that the price action is working higher, I'm identifying the channel, because this will help me not sell as long as the buyers are still present in the market. You can see I'm just going to adjust it a little bit. You can see how lows of these candles are nicely fitting inside of this channel. Now, I don't think I can go long directly into this resistance that acts as a support, directly into trend channel line. This is too far up, so I'm just waiting. Okay, and notice what is happening. Okay, I can see massive rejection outside of the trend range, and I can see that this key level right now held, which is important clue, because if you're going to push above this key level and it's going to hold, you expect for trend range rules to apply, and you're right now playing the trend range. But because this key level didn't hold and we got rejected and we continue working lower, this is confirming the bearish bias. So this breakout area a lot of times will get tested. So as I'm watching this, I'm leaning more towards some failed second entry long, some bullish trap, but it never formed, not even low or high, and market already created another leg down. So the overall bias right now is definitely a little bit more bearish, because we are still trending lower. But there is no good downtrend that I would like that would fit pretty well. Now, when I was watching this live, I drew a little bit of a downtrend off the highs like this using the previous day session, which we don't do most of the times. So this is one of those trend lines that I'm drawing just to help me navigate the price action. Overall, I see that we have weak bearish downtrend because it looks mostly like a trend range that is slightly tilted down. So I'm going to redraw the short and uptrend again. Okay, I have only first entry short. I'm not interested. We have micro double bottom. Okay. Now I have a two-legged pullback second entry short, but the second entry short is above EMA. Plus, I don't have any clear downtrend that is confirmed working lower. It's getting too sideways, so I definitely cannot sell, even though it probably worked for a scalp. Okay, you have another short attempt here, but at this point you're above EMA. It's getting too sideways. Notice how EMA is flattening. The bias is unclear, and since we have micro double bottom, I can also start drawing my channel here. So once I'm not sure what's going on, I'm just waiting. And you can see the bias is not that clear. Okay, and now I can see that the price action is reacting to my channel. So I'm gonna mark my new high. And when I'm watching this and I can see that this channel is getting confirmed, I'm considering a failed second entry long, okay? Because the structure is overwhelming and more bearish. And once again, notice the breakout area. It acted as a support here, here, and here. And now it's getting rejected as a resistance and getting rejected as a resistance again. So this is telling me that the structure is still more bearish. I'm not looking to go long, but there is no failed second entry long, and price action just keeps working lower. So I'm going to redraw a short and downtrend like this. Also, what I can do is I can draw support here, because you can see how EMA is flattening, and it basically looks like we traded down from the trend range. And you can see the trend range is measured more or less. I can just draw it a little bit higher. So measured moves not only work for legs but also for trend ranges. Okay, I have a second entry short here, but notice the body is so far from EMA. We have micro overshoot, and the bar is doji bar. I cannot sell here. It's too far from the EMA. It's a doji, possible overshoot. And now we have two-legged pullback. This is good. Okay, we have visual two-legged pullback. Had this closed below EMA, this would have been a decent high probability setup to consider. But since I'm watching this still above EMA, I'm expecting a lower high confirmation setup. And now we have a couple of ticks higher, reversal down, EMA keeps holding, and we have first high probability setup for the day, lower high. Because the downtrend needs to get new extreme, EMA keeps rejecting prices, and it's confirming the visual two-legged pullback. And price action created new low for this short and downtrend. Okay, so what I'm going to do, I'm going to redraw the short and uptrend. Now you can see that the structure is still very range-like. It's not much of a downtrend. It's very, very weak downtrend. So I'm observing price action is reversing higher, and this is not surprising because this is acting more as a trend range, and this channel that I have drawn is mostly supportive channel in case it's going to get truly confirmed. Now I can see a massive bullish rally. So this is changing the structure a little bit. Let's see how EMA is going to react. Okay, we're breaking lower. I have a first entry long, pull back, second entry long. I cannot take second entry long below EMA because we have a downtrend in play, and at the same time I cannot take a failure if it triggers because the signal bar is doji and we may get new high for this uptrend. Never triggered regardless. I'm just waiting, and you can see it's getting stacked. We have 1, 2, 3, 4, 5 bars stacked right next to each other. So you have congestions, a lot of stims, a lot of dojis, but price action is back above EMA, and this is important. Once we can see depletion of the bearish momentum, it is 2 sideways, and I can see that the bulls are back above EMA. This tells us that the bulls are going to get new extreme according to this trendline rule. I might as well delete this channel because right now it is too range-like. And notice what we have. Micro double bottom resets the count. So this is a high-low confirmation, or it is a visual kind of like a first entry short pullback, second entry short failure. But this is also breakout pullback because if you go long here, you're buying the breakout. And most breakouts will fail, at least temporarily. So you can see it worked higher, came back, and now since the EMA is holding and this tiny resistance is holding again, this is a great high probability setup because it is a high-low confirmation setup. The uptrend needs to get new extreme. Notice how steep this spike was, very strong, and you're back above EMA. So this is also breakout pullback. I'm going to mark breakout pullback out of the congestion, which is a really good sign for the bulls, and market continues working higher, and you could have held the runner all the way, just trailing it one tick below each significant swing. So what I'm going to do, I'm going to mark new high, but I can see that the momentum is extremely strong, and we have moved so far up, so many points for me to just consider this as this one tiny leg. And by the way, hopefully it makes sense what a high probability setup is. Notice I'm not looking to go long or short anywhere on the chart. No, I'm looking for specific areas on the chart for price action to pull back to, following the rules, and because where the correction phase will end, this is where the high probability setup is going to form. So here the correction ended, created a move down, and here the correction is ending, creating a move up. And you're working with the EMA, you're back above EMA, indicating bullish momentum, you're below EMA here getting rejected, so that's confirming the bearish momentum. So always guide the EMA and use the trendline rule. Since I can see that we have created so many points higher to move, I'm going to be trusting the wider uptrend. Okay, and the EMA is going to confirm it. So what I can see now is I have latest highs high, I'm going to reset the count. I'm using the price action counting technique to count for entries. I have first entry long, pull back. Can I get a second entry long? Okay, this is looking good. Can we get a second entry long, break above this bar, because the downtrend also have a new low. So this is a good sign that the bearish momentum played out, but there was no trigger. Notice there was no break above this bar high. There is a break above this bearish bar, which is a horrible bar for me to go long. And unfortunately, the setup worked. Great setup for new extreme, clear two-legged pullback, textbook setup, but the signal bar was just very bearish. You know, unfortunately, we can't really take it. It's a shame because this would have been otherwise perfect setup. But this is what two-legged pullback looks like at the EMA, and you need to get new high. So unfortunately, no good signal bar on our chart. If you have better bar on your chart, you can definitely go long here. So now we have new high. This means I'm pausing, looking to go long. Okay, now we have a new high. First entry long, pullback, second entry long. Am I looking for am I looking for second entry long? I'm not, because the uptrend already reached a new high. That's the goal of following these channels. They help you navigate the price action. I know that I don't have to be buying here, even though this looks up, okay? To average retail trader, this looks like the momentum is still up, but we follow the trendline rule. We connect the first two tight swings. There's a clear break new extreme, and right now the downtrend also is in play. So there's a chance for reversal patterns. There's a failed second entry long, but we have 1, 2, 3, 4, 5 bars stacked right next to each other. You know, you can consider this is not a bad setup. Context-wise, it makes sense. It just would have been better had it closed kind of outside of this congestion because this is a failed second entry long. Okay, I can see price action working lower. Since the uptrend played out, I'm drawing my channel wider. We expect reversal. I'm going to redraw the short and uptrend. We have moved too far down for low high now. So I want to see second entry short. And that never formed. By the time I get second entry short, it's all the way up here. and that's not really a good setup. Okay, I can see price action moving higher. Let's see how EMA is going to react, and we're breaking below EMA again. Okay, so this is extremely confusing. And once it's confusing, what does it mean? That's probably a trend range. Confusion is a hallmark of a trend range. I see a lot of price swings up and down, up and down. I see EMA flattening, and you can't find any channel. So this means that we are most likely trading some form of a trend range. So if I'm unsure, I'm just going to draw this to make sure. Okay, we're continuing working higher, but pretty much no way for me to get in on this uptrend. We have a break new high, but once again, this move is extremely steep. Okay, you don't want to be fading this because this is such a massive leg up. No pullback, so you just be patient. Okay, we have a first entry long, we have a second entry long horrible bar, and now we have high-low confirmation setup. Now, had this been better signal bar closer to EMA, you could have considered, because this breakout area of the trend range is acting as a support, acted as a resistance, and now it's acting as a support. Held here again, and EMA keeps holding again. So since you have high-low confirmation setup, you can trust that the market is going to go higher because this was once again very steep, no broad pullback, no sideways correction, nothing. So we're going to most likely continue working higher. But the signal bar here is very doji, I can't really take, and market continue working higher. And this was just a bullish momentum. It confused me a little bit because this is where I drew this channel for a bit. I was expecting second entry long, we have a new high, first entry long, but there was no second entry long, and market continue working lower. Okay, so this is already quite confusing. Definitely cannot go long because this is such a strong push down, downtrend in play. I would need to see push above EMA and a felt second entry short, and that never formed, and market continue working low. So at this point, I adapted to just bearish structure. I widened my channel because the downtrend is stronger. But even if I'm playing the bearish structure, there is no way for me to go short. Everything is far away from the EMA, no clean setup, so I just have to watch this go all the way down here. Okay, we have tiny overshoot, potentially. Have a new low, first entry short. So what is the bias right now? Bias is clearly bearish, so I am still looking for high probability setups to sell. EMA is aligning with the channel, but once again, uptrend in play, we're far away from EMA, I cannot take. Okay, and price action is going all the way down here. Notice I'm going to redraw our key level. I'm going to extend the downtrend. You can see that the price action is following these rules. There's a reason to price movement. It's not random. It's the furthest thing from the truth. Okay, we're correcting highs. So once again, every correction is a mini channel in itself. So I have a second entry short, but I cannot sell. Okay, I have a lower high, but notice the signal bar still not the great signal bar to sell below, and we don't fully have new high. If we had new high, clear break new high, you could have probably risked it, but the signal bar still have a decent bullish body. I cannot go short. I'm looking for second entry short, and notice you have new low, first entry short, second entry short. Can reset, kind of like a new low, first entry short, pull back, second entry short, and we finally reached the new extreme. And this right here is a second entry short while the uptrend played out, and this is also visual to like a pullback like this, and this downtrend needs to get new low according to trendline rule. So this is a great high probability setup. Market created the quick easy scalp. If we get a trigger here below lower high, that's a great setup, but there was no trigger. There was no break below this bar low, so lower high never triggered, and market continues working higher. At this point, however, I'm still thinking bearish. This was the main trend down that needs to get new low, so I'm not really looking to go long at all. Okay, we have a new high, first entry long, but I'm not really thinking long because the bigger pattern takes precedence, and we should get new low. And now we have new high, first entry long, pullback, second entry long further. Okay, at this point, since the bears still want to get new extreme, this is a failed second entry long. I forgot to mark second entry short here. This is a failed second entry long below EMA. The only negative here that can confuse you is that this downtrend has a small break new low. And because you expect new low for this downtrend, you may draw a little bit wider, but it's a little bit confusing, especially for developing traders. So I'm going to mark it more aggressive. But because I still expect new low for this significant downtrend, this is a great setup to take because you're below EMA the bar looked very bullish, and at the end of the bar, reverse all the way down. So stop loss goes above the second bar, you enter to close the bar. It was a quick, easy scalp, quick momentum. Okay, you're back above EMA, so this is odd. And you're back above EMA. Okay, so at this point, I have to go back, reanalyze the structure, and I need to be objective and see, okay, there was probably a wider uptrend like this. They just had overshoot, which can lead to stronger momentum. We had overshoot, but now we have break and new high again. And once again, I cannot draw a wider uptrend, because if I'm going to draw wider uptrend like this, it's too empty here, too empty here. I have only one confirmation, no other swings, and it's not taking into consideration the early swings right here. This is too broad. Okay, it looks more like a two legs. First leg breaks second leg, and this downtrend still needs to get new low. So if anything, I'm looking for failed second entry long again, just like here. Okay, the correction was just a little bit longer. You're just following price action. You're trading the structure you get, not the structure you want. So always be objective. Don't get married to idea for a long time. First entry long, pull back, second entry long failure. And now we have a great failed second entry long. And if you're watching this live, you can see how fast this was. This closed so quickly below EMA that my limit order didn't get filled, but it was really great failed second entry long because you're at the top of the correction phase. Downtrend played out, uptrend played out. Okay, we're back above EMA, first entry short. Okay, so horrible bar here. You know, there's a chance even for this channel, if we're gonna connect this, which this lower high right now, I can actually treat as a new high, first entry long, second entry long failure. It's just a little bit too sideways. So this is not a bad side, it's most likely gonna work lower because you expect the new low, but feels a little bit more aggressive because you're buying quite close to these lows. And market is overshooting even the wide channel. Okay, we're getting very close to creating a new extreme. We are away by a couple points. Let's see what's gonna happen. Now that I see overshoot, I need to adapt and I need to expect stronger bullish bounce. I'm redrawing the channel. Notice this is downtrend, two-legged pullback, move down, and sometimes you may not get fully new extreme, especially since the support is this close. And remember, this is area, this is not really just a thin line, this is an area of support. So it doesn't have to be absolutely perfect, and price action close is close enough. So it's very likely that sellers make as a valid retest of this low and the bulls may take over. When you're unsure, just follow the short-term channels. This is what you do, you're just following the channels. They can keep you on the right side of the market. You don't want to be guessing on to take high probability setup. You have first entry long. We're back above EMA, we're going too sideways, and now it's getting too late and market reversed. So this is the big structure for today. You can see, following the trend line rule, this was quite a confusing area because it got very bullish here, but it instantly reversed all the way back down. So you have to adapt, redraw a brand new downtrend, and make sure you always identify the key levels once you're trading in trading range. Because the support, once it acts as a resistance, is giving you brand new information that you can work with, and you can change the bias upon receiving this information. So I hope you had a decent trading day. I'm gonna wrap it up, and good luck with your trading.